Hey, what's going on, everybody? Your boy Holly Mays with Optioneers Podcast, Wall Street Warriors Worldwide, man. Today, we're going to be talking about how to pick a good company, man. We're just going to talk to you a little bit about some ways that we use to make sure that we get the best company, not only short-term, but long-term as well. But before we get into that, guys, do me a favor. Hit that subscribe button, man. Hit that little red subscribe button. Give us some thumbs up, man. It tells the algorithms we're not the only one watching our own videos. But more importantly, guys, please, we want to keep you updated on everything. So hit that bell notification. That way, every time we come on with something and we're dropping some new heat, guess what? You guys get it, man. Let's go. Welcome back, guys. Again, man, Holly Mays, man, Optioneers Podcast host, the CEO of Wall Street Warriors Worldwide, man. Thank you guys for dropping by, man. I just want to talk to you guys a little bit about some methods we use to actually pick a good company. Again, before we do anything, please hit that subscribe button down below, man. Also, give us some thumbs up, man. Let us know you're rocking with us. And also hit the bell notification. That way we can keep you updated whenever we're dropping some new information, okay? Keep you abreast on what's going on in the market. But this is fairly easy. We're not going to get all technical with this. This is for beginner investors, option traders, stockholders. I'm not going to get real technical, so please forgive me. So if some of you guys that are rocking with us, man, you're like, oh, man, I've been doing this 5 years. We get it, man. It's not for y'all. This is for people that decided one day, it's like, hey, I want to expand my portfolio. I want to make more money, whether it's to get off that corporate plantation, whether it's to buy a new home, go on a vacation, just put some money back for the kids' college fund, whatever the case may be. This is for those people, okay? And I'm going to make this extremely simple for you guys, okay? So real quickly, I'm going to tell you the platform I really, really love, and I personally think, and our team thinks that is a great introductory and foundational platform for those that are trying to pick good companies is Yahoo Finance. Yahoo Finance is just awesome. I know when I started a few years ago, it was so many, man, they threw so much stuff out there at me, and I'm like, oh my God, I don't even know how to read a P&L. But when I went through Yahoo Finance, they made it really, really easy. So I really recommend this for new investors, especially if you've been investing for under a couple years. Please use Yahoo Finance. I think it just really breaks down everything. Plus, if you Google whatever it is you're looking at on Yahoo Finance, they have a great tutorial and outline that can help you with this. Okay, let's go ahead and move forward. So the first thing I'm going to do with Yahoo Finance once I click on is, now let me say this. If you're using Yahoo Finance on the desktop, it looks totally different than on the phone, okay? So I want to go ahead and make sure that you're aware of that. But for cracks and giggles, I'm actually using my desktop, guys, because I like to see the full screen. If you're using your phone, that's fine as well. You still can relate to some of the things that I'm saying. It's just going to look a little bit different, but I'm going to kind of help you with that as well. So the biggest thing is just searching whatever stock I want to search for. So for today, I'm just going to put in Tesla, okay? All right, boom. We're going to put in Tesla. So when we type in Tesla, you'll see Tesla shows up. It has what it did today, what it ended with, what it's doing in the aftermarkets, all of that. But the main thing you're going to see right up under where it says at close at 4 p.m., you're going to see a string of lines. And it has summary, it has company outlook, it has chart, conversation, statistics, you name it. That's what it has, okay? The main thing that I look at when I'm looking at this is statistics, guys. I go to statistics. Now, don't get me wrong. A lot of people may go to financials. We don't. Okay, we believe financials is a little bit technical for the beginner from a foundational perspective. So we actually go to statistics, and from statistics, we go to a few categories. We're going to tell you what those categories are, and we're going to also tell you why they're important as well. So when you click on that, you're going to see valuation measures. Now, I'm going to scroll all the way past that. We'll get in another video that goes over all of this stuff and everything. But right now, I'm going to go past valuation, and I'm going to go down to where it says financial highlights, okay? Now, even when you see trading information, I'm not worried about that right now. But the biggest thing right now is I'm looking at financial highlights, okay? So the first thing I'm looking at, and I'm going to scroll, and no, I'm not looking at, profit margin and operating margin. I'm not looking at that. It's a little bit technical. The biggest thing I'm doing is I'm coming down to income statement. And once I get to income statement, guys, the first thing I'm looking at is revenue. I want to know the revenue that this company has made from a quarterly perspective. All right, from a quarterly perspective. And when you look at Tesla, and we're just using this for an example, when you look at Tesla, it says 67.17 billion. Okay, that's a huge amount of revenue. And I'm gonna tell you why that's important in just a second. Okay, the next thing I'm gonna look at is quarterly revenue growth year over year. So what that means is this time last year, this quarter last year, how much growth did this company have? And when you look at Tesla, it said 41.60%. So that means Tesla from this quarter, as opposed to the last quarter this time last year, it grew almost 42%. I want a company that's going to grow year over year, quarter by quarter. Okay. Now the next thing I'm going to look at, guys, is gross profit. Okay, gross profit. That's not net profit, but gross profit. Now this is all a quarterly perspective. Okay, so in the quarter, the gross profit is $13.61 billion. That is just awesome. Okay, and then I'm going to look at quarterly earnings growth. Again, I'm looking at earnings from this time last year. All right. So from this time, so the growth that this company has had in earnings and what it's made, okay, is almost 98%. So it almost made 100% of what its entire company. And this is just awesome to understand, guys, when you're picking a company, because again, the name of the game is to make money. A lot of times we get in companies and we're not in companies to make money. We're just, oh, this is popular and oh, this is great. I'll use an example that I heard one of the guys on Earn Your Leisure said. I think it was Ian. It was a sit down that they had. It was Wall Street Trapper and Ian. They were talking about the market, and one of the things Ian said was, and I thought this was really powerful. He says, "Do you want a first round draft pick that's going the fifth pick in the draft, or do you want a fifth round?" Okay, and the reason why that's relevant is because a lot of times we look at price and we look at, wait, hold on, this is too much money. But you gotta understand, if you're trying to get to a place to where you're trying to replace an income, or you're trying to filter money into something that has a bigger amount that's needed to purchase it, whatever the case may be, you're going to need a company that's going to continue to go up. You don't want a company that's going to go down. And this quarterly earnings growth is letting me know, okay, in the second quarter of last year, this company has grown 98%. Okay, so year over year, from a quarterly perspective, and at least in quarter two, we're up 98%. Okay, that's huge when we're talking about getting a company. Okay, so those are some things that we're looking at. We're looking at revenue, we're looking at quarterly revenue growth, we're looking at gross profit, and I'm going to look at quarterly earnings growth. Okay, I just want to know year over year, quarter over quarter, is this company making money? Is it building and growing? And I'm going to tell you why that's important in just a second. The next thing I look at, guys, if you scroll down, is balance sheet. Now, in the balance sheet, this is huge, okay? Because this is letting us know the money that's coming in and out, okay? This is debt and actual liquid cash, okay? Because sometimes I could get a loan, but I've already made the money back to pay the loan. So it's not a loan, it's only a loan on paper until I pay it back at the end of the year. So the first thing I'm looking at is total cash, all right? I'm looking at total cash. Now, the reason why total cash is good, because this is the company's total amount of the company's balance sheet, okay, which shows a company's staying power, okay? And in other words, I'm asking the question, does it have enough cash to operate? If outside of the debt, we're talking about outside of the debt, does it have enough cash to operate, okay? Or does it have too much debt? Does it have too much debt? So I need to know how much cash this company has. And right now, if I'm looking at Tesla, it has almost $19 billion in cash. Now, the next thing I'm looking at is total debt, okay? Total debt. Now, I'm looking at total debt because this is the company's total amount of debt in the most recent quarter. Okay, everything we're talking about is on the quarter, because guess what? Let me tell you why. Because years are segmented into quarters. Quarters let us know how the year is going to be. So when I see something that says total debt, it's letting me know, wait, this is how much debt it had for this particular quarter, okay? And debt is the money the company has borrowed, okay? How much the company has borrowed. Just because I borrow it does not mean I'm in debt, all right? I'm gonna say it again. Just because I borrowed it does not mean I'm in debt. Now, different industries use different levels of debt or leverage. And when we talk about leverage, we're talking about using borrowed money to increase value. And sometimes the only reason I borrow the money is to make my evaluation look higher. Okay, it doesn't mean I need it. It just means I want to make my company look bigger than what it is. I got the money to pay the debt, but not only does it help my business credit, but it also makes me look like, hey, I'm the man with the plan. Okay, so this is huge. So when I look at total debt and I see 6.66 billion, but then I see total cash, which is 18.92, what that's letting me know is I have the cash to cover my debt. So in other words, I'm debt free. Okay, I'm debt free. All right, this is huge for me. Okay, so right now, if we look at Tesla, and if I was going to get in Tesla, guess what? I'm going to look at Tesla because Tesla is debt free. All right, as a matter of fact, Tesla is actually $12 billion into the positive, as opposed to $6.6 billion in the negative, which if we don't know how to read a balance sheet, guess what? We won't understand that. We'll say, oh, well, Tesla has $6.6 billion in debt. No, it doesn't. No, it doesn't. It just got a loan or just got or somebody to give it money because now, guess what? It makes its evaluation look bigger. All right, does that make sense? All right, cool. The last thing I look at, guys, when I'm picking a company, the last thing I look at when I'm picking a company is cash flow statement. Cash flow statement. It's imperative that you understand what a cash flow statement is, okay? And this section, what it does is it lists the most important data from a company's cash flow statement, which shows the detailed in and outflow of this company's cash, okay? So it's basically saying it's seeing real cash coming in is more convincing than what's claimed in income statement, okay? So basically, I'm seeing the money that's coming in, all right? And this is minus what's on hold or what I couldn't collect. All right, because sometimes we'll say, oh, okay, well, they owe us, so we'll put that on our income statement, but that's not the cash flow that's coming in. All right, so this is the actual money that I'm dealing with. Now, there are two things that I deal with a cash flow statement, okay? And these are huge, all right? These are huge. The first one is operating cash flow, okay? Operating cash flow. This is the amount of cash generated by the company's business operations. So basically, the workings that's going on and us doing what we do, this is the money that's produced from us operating, okay? Now, why do I need to look at this number? Because looking at revenue alone might not be sufficient as even if sales are good. And the reason why I say that is because a company might have problems collecting the cash, all right? Just because on my income statement, I say, oh, you owe me. So on my income, I'm saying it like we've collected it. That looks good to shareholders, board directors, things like that. However, when we're talking about the reality, when I'm in the back office looking at this with my CFO and COO and CIO and all these guys, guess what? I'm looking at the cash flow statement because that's letting me know the money I got. All right? That's letting me know the money that I actually got. Leverage-free cash flow. Now, this is important. Leverage-free cash flow is the amount of cash the company has left after paying all its financial obligations. So watch this now. After I paid the debt, after I paid my employees, after I paid my rent, after I paid what else? Advertising, all of this. This is the actual money that I have left after all of that. Okay? After I paid all my financial obligations, this number measures how much cash the company has to expand its business and to pay dividends to shareholders. This is huge. And when you look at Tesla, and I'm just using Tesla as an example, they have $5.96 billion, $6 billion left after taking care of its business. Okay? After taking care of its business. They have $14 billion of operating cash flow. Okay? So that's why I can tell you that they're debt free. And that's the last thing that I'm going to look at, guys. Also, and it should be in a cash flow statement, but it's not because they don't say on their debt free. But guys, looking at these numbers will let you know that the company is debt free. I very rarely invest in a company that's not debt free. All right. Because a debt free company will never go out of business. All right. A debt-free company will never go out of business. So when you put these numbers together and you're looking at debt and you're looking at total cash and you're looking at total cash per share, whatever it is you're looking at, the bottom line is how much money do you have left over to pay dividends or to pay your shareholders or to give out bonuses or to do stock splits, or what do you have left over? Because if you're negative leverage free cash flow, then guess what? You can't pay dividends. You can't pay your shareholders. Okay? You can't expand as a business. You just can't. And that's a business that's eventually going to dwindle away. That's what happened with Blockbuster. That's what happened with Blockbuster. That's what happened with Minyards. That's what happened with Kmart. That's just what happened with a lot of these huge companies. They just could not maintain a good positive cash flow statement. And that's why they ended up going out of business. So, guys, I'm always looking at these things. I pray that this helped you, especially from a beginner's perspective. And these numbers are not crazy. It's just simple adding and subtracting. Adding and subtracting. Do I have more money left over than I got that I owe? Okay? Because again, quarter by quarter, I'm going to always ask somebody to put some more money in. I'm going to always ask people to invest into my business. I'm going to always ask people to help me grow my business. But guess what? If I got the cash to pay back that and then some, guess what? I'm a great business and I can grow and put other businesses, put my business in other locations. I can expand my business. I can innovate my business. I can do all those things that caused me to stay here for years on. Walmart, great business. Tesla, great business. Apple, great business. These are businesses that have tons of staying power. Why? Because they're cash flow positive. All right. And that's what we use when we're going to get a business. We're not worried about how much the company costs per share. I'm not worried about the Tesla is $900 a share. I don't care about that because guess what? I know it's a business that's going to continue to grow. So that $900 a share that I just bought, guess what? Eventually it's going to be $1,000 a share, $2,000 a share. Even on the stock split, if it goes down to $200, it doesn't make a difference because it's eventually going to come right back up to $900. Why? Because it's cash flow positive. It's always generating billions of dollars quarter after quarter. And guess what? It's the number one company in its field. That's another thing you got to look at. Okay. Where is this company in its field? Okay. Lucid is not better than it. Ford is not better than it. GM is not better than it. Volkswagen is not better. Tesla is the number one EV company on the planet. And that's the company I want to be a part of. That's the company I want to invest in. And that's the company I want to side with and partner with when it comes to me growing my income and my fortune. Okay? Guys, I pray that this was beneficial to you. Do me a favor, man. Like, share. Make sure you put some comments on there, man. We want to be able to answer any questions that you may have. Please make sure you're joining our investing class on September the 17th, where we're going to talk about some of these things on how to pick a good company. And we're going to go a little bit more in depth over the balance sheets, cash flow statements. We're going to talk about income, profitability statements. And we're even going to get into stock price history and trading information as well. And we may look at some of the financials as well so you can get a better understanding of that as well. So please make sure you go register for that. It's $20. You can catch it in the descriptions down below, man. Seat is limited seating. I think they're only allowing maybe 50 to about 75 seats. But go ahead and register. It's only $20. That way you don't miss it. And it's on September the 17th. But guys, that's my time, man. I appreciate you guys for always being around, for supporting. Make sure you follow us on Facebook. That way you can get a ton of information. Also, man, make sure you follow our $50 a day challenge. You can find that information on Facebook. But more than anything, guys, do me a favor. Do me a favor, guys. Make sure you join us every pre and post market, every single day when we talk about the market. We talk about what happened, what we did, good and bad. We even put our portfolio up, guys, so you can check it out, whether we had a great day or a bad day. It don't make a difference, all right? But guys, thank you so much for joining us. Thank you for supporting Option Nerds Podcast. We love you with the love of the Lord. Remember to uplift Christ wherever you go, and do me a favor. Make the rest of your day the best of your day. We're out of here, y'all. Peace.